And everybody, it's Tim Reazor, the Chief Investment Strategist here at Revere Asset Management, just before 4:30 on a Tuesday night. Very quickly, stock nerds, market lovers, before we begin. So what I want to point your attention to here is this video podcast. In here are option strategies to which we discuss, and in here as well, not only for the outlook for the week, and then Don does a great job with his 21 over 21, but there's a screen in here for top stocks under $10, and the screen's yours for free. You just have to watch the video. You can get the criteria. You just open up if you don't know what FinViz, as in financial visualization, know what FinViz is, you can have a free account there, and then you can implement the criteria to get yourself your same growth top stocks under $10 screen. But you just have to watch the video to see what the criteria are. And so that's proven to be really popular if you haven't seen it yet. And if you have any questions, concerns, comments, take umbrage with anything that I'm saying, all you have to do is email me, tim@revereasset.com. There's the portfolio extraordinaire himself, Don Vanderboord, and then America's fiduciary, Danny Stewart. Listen, let me tell you something, stock nerds. You have watched cumulatively over the last 30 days, almost 1,000 hours of our content. It's absolutely astounding. And we can't say thank you enough. And listen, you're referring your friends and family to us. We don't have any salespeople. All we have are you, the army of stock nerds and market lovers across the globe. And so believe me when I tell you, we're humbled by how many emails we get and how many direct messages on Twitter we receive, and just your participation in our lives. And so thank you. Hopefully we're providing value to you. If you want more value, just email us. We'll try to do anything we can to empower individual investors across the globe to find success and get you out of the grips of what I refer to as always the traditional advisor brotherhood will kill you eventually financially, and to get you out of those grips and to empower you. Or if you like the strategies to which we espouse here in the videos, we'd love to do it for you. We'd love to be helping you while you're learning along with us. So if you want any of that, 855-732-5932. And then look, I used to give my phone number out. My text messages just kept blowing up. If you want to message me, @TJReazor is my Twitter handle, and you can just let me know you followed me. I'll follow you right back, and then you can message with me. It's the closest thing that you're going to have to texting me. It's brevity. I appreciate brevity. I have a bunch of emails I still have to clear out of my inbox. Email questions get long, and so I try to answer them. I take time in answering people that write into me, and so it just takes me a little bit longer. Twitter is a much faster medium. So if you just want to open up an account to communicate with me and Don and Danny, that's absolutely positively fantastic. And so anyway, with that, these videos are for what? Your edification purposes only. They're never ever to be misconstrued as advice. If you want advice, seek advice. If you seek advice, all you have to do is, in fact, give us a call. Real quick, let's do some risk metrics. Then I'm going to do I'm going to do gold and silver too in this video. I'll also take a gander at how did that PEDS trade turn out. We're going to talk options and earnings, Tesla, cheap overlay. We're going to get all into it. But real quick, look, VIX. For people that try to trade VIX products, it's a really, I don't trade VIX products. UVXY, VVXY, the volatility of the VIX, I just don't trade them. I don't even know if UVXY is still around. TVIX is what they killed off. Look, you've got the Bollinger Bands pushing lower here now. You can go lower. Does it make sense to maybe come up and test a mid-band? Sure, absolutely it does. But it doesn't mean it has to. And so I'm telling you, when you get a close outside the Bollinger Band and then back inside, that's when you probably want to start lightening up. That's how I've used the cash VIX. People's VIX is not a very good gauge to help you timing when to take some risk off the table. The VIX futures are much better, and they're not even close to inverted. SPA, this is a beautiful weekly chart, friends. This is a beautiful weekly flat base that's developed. And so it's just coming down to the 21. Now it's getting tighter and tighter. And for me to tell you that it's not going to go this way, I'd be lying to you. And I don't know if it's going to break this way because it's a market and anything can happen. If it was certainty, there'd be no risk and there'd be no rewards in investing. They just call it interest rates. They'd call it the risk-free rate, and it would be so you'd get crushed by it because there's no money in interest rates anymore. And so that's what makes a market. And so What you have to do is position size and understand the 7, maybe 8 characteristics that all great winning stocks have before they make their biggest price moves, and add a little bit of wherewithal to where you are in time and space in the market, such as the put call ratio, a contrary indicator. Look, everybody's bullish this market. And if you want to know, look, everyone's talking about the end of $600 coming up at the end of July, but here's my thing. People are they're pressing their bets. They're not pulling their money from the market. No. If you're getting that $600 extra in unemployment, God bless you, because I mean, unemployment sucks. Like the unemployment rate in this country, my heart goes out to everybody who wants to work and can't. And if you're getting an extra $600 or whatever, and you've been investing in it, my thought is that you're seeing these higher prices because you're pressing the bet. I don't think that stops until the $600 stops, and maybe it doesn't stop. Maybe they're going to extend it. I don't know. And I don't think it helps to play those games. I think it helps to understand that you take 5% stock positions, maybe 10% ETF positions. You can always adjust those lower. But some of you are leveraged to the hilt. But I don't mean leverage. Like maybe Amazon is 50% of your portfolio. Maybe, give me another high beta name. Maybe Zoom is 20% of your portfolio. That's a lot, right? That you're like, well, Tim, that's not that much. Well, 20% when your stock goes down 4 or 5%, you know, that hurts. You're like, well, Tim, when it goes up 6 or 7%, that's great. But it's, you know, it's like the old adage, it's easy to make the money, it's hard to keep it. And so let's focus on keeping it and risk control and understanding that everybody is bullish. Look at this 10-day moving average. This is that big 1,800 point drop day in the Dow, and you can see you got the same metrics. These are actually worse. They're worse than when the big drop started happening at the end of February. And so you just want to understand where you are in time and space and be a little mentally nimble. But by no means do I think you want to be short. It's been difficult. But look, I'm showing you a chart of the S&P futures right here. And you can see there's the 8, there's the 5, there's the 8, the 21, the 34, the 15, the 200. And look, if you're newer to these videos, I get it. You're like, Tim, what the are you talking about? Just give me 3 weeks. It's 3 weeks of a nightly video between Don and myself. And then we do a 6th video a week. It's the video podcast. You give us 3 weeks. You're going to look at the markets differently. You're going to approach risk differently. You're going to think more in probabilities, and you're going to find more consistency. And if you're brand new to all this, stick with us. Reach out to us. We're here as a resource to you. We've got a gazillion classes we can send you that we've done. There's a ton of resources to help you not fall prey like a lot of you did in March, where you're down 35, 45%. And you're like, what the hell's happening here? Why didn't my person protect me? And look, you have to, you know, when the markets are down 35%, the indices, you got to understand individual stocks are down tremendously more. We were down 5 and 7% respectively, and now we're wickedly green, while S&Ps are flat. Nasdaq's had a great run, but it's risk control, and it's being able to sleep at night. And there's such a better way to do this, and we try to highlight that every day for you. So S&Ps are extended. They're extended off the 5. They're extended off the 8. Of course, they're extended off the 21. And the Nasdaq here is actually a better looking chart after today. So Nasdaq does this is a daily chart you're looking at, okay? Nasdaq does this little consolidation here around the 8, punches up dramatically yesterday, and now it pulls back about 1% on the futures, and he just pulled back to the 5. That's a beautiful looking chart. Beautiful, beautiful, beautiful. So if I took this to say the average true range charts, which we've been working with longer term viewers all year, you can see you're really not that third ATR on the NASDAQ. But look, when you hit the third ATR, you tend to want to pull back. You don't even get back to the mean. And what's the mean? The mean is the 21 exponential moving average, even though it says simple down there, it should say exponential. And on a daily, on an average day over 21 days, the NASDAQ futures are moving almost 264 points. That's ridiculous. I mean, that is a huge range. So the 100-point move today, not too bad, right? But look, you get up to, and when I say the third ATR, that's 3 of these ranges above the mean. So right now you're 2. That's starting to get a little bit stretched, but it's not third ATR. It's not third ATR like it was here, and then you had that bigger drop. You don't have to get up to the third ATR. They don't always go up to the third ATR, but just know where you are in time and space. You're not that extended on the NASDAQ, which is the leading index. Whereas if I type in the S&Ps, yeah, even though it's 2 ATR, it's a different looking chart structure. How about the YMs? YMs, you're just consolidating at the positive 1 ATR there, and the RTY, you got the that's a little bit of a nice consolidation above the mean. And so, can you pull back? I don't think the path is clear indice wise, and I think you've entered this phase where it's really going to be more or less about individual stocks and maybe not so much about the indices per se. And so let's do this. Before I start talking about the stock I bought today with Danny and the ETF stock and ETF portfolio, let's do this. Let's do pets real quick because I want to close up some loose ends from Friday. So I bought, just to show you the ridiculousness around earnings and implied volatility, I bought some pet calls coming out of here. They had this little pullback here. They had this nice move up, and you can see, let's see, that's that Monday right there. They report Monday, and Tuesday they try to recover. But I always tell you, you got to sell your options. If you buy calls or you buy puts, you want to sell them before the event because you don't know which way it's going to turn out. Pets actually just traded within the expected move. And then let me see if I can pull up what I did here. So I bought, let's see, I bought some pets. This is July 15th. So I bought, what I ended up buying, like 6 calls, 3 calls each block, $1.58. And then I just started I let one go on the 16th. And then I had 5 left and I let them all go on Friday, okay? And so they pretty much held their value. Those were the 45s. They were the out of the monies, the 45s. And so let me show you what those trade for right now. So they're only monthlies in pets, but look, that implied volatility is bled off. That was closer to 100. It was well over 100. And now the 45s are what I sold for $1, what I bought for $1.58 and sold for what, 201, $1.80, $1.75, are now trading theoretically about 30 cents. So even though there's 31 days, even though there's all this time, because time is not your friend here because of this, the implied volatility. The air has been let out of the balloon. So like, I don't own anything in Snap, but if you look at Snap here, Snap goes out at 173% tonight because they reported earnings, and the expected move was $3. We'll just call it $3.50. So what's the move from 24.74? Yeah, you're staying within the expected move. The expected move is set by math, by the market makers. And look, that expected, there's a little over 70% chance that you're going to stay within the expected move. So who wins 70% of the time when you buy calls or puts? It's not you, it's the house. It's Golden Nugget, it's Caesars, it's the Bellagio, it's the market makers. So you want to be a seller of calls and puts. But if you understand a little bit of timing and what I'm talking about, you can take advantage of that. So we do not own Tesla in the shop. We've owned Tesla like 4 or 5 times. I've taken a good chunk of money out of Tesla each and every time. But I don't own it going into the print tomorrow, but I do have a couple positions I want to show you in Tesla. So before I get into those, let me just show you this. So 184% is the implied volatility. I've got the video with you. I don't think I have the video Wednesday. I've got it Thursday and Friday with you. And so 184%. So we'll see where, I'll take a screenshot. We'll see where that tops out, probably closer to 200. The expected move is 234, just about $234 through the rest of the week. Overnight, looking for a $200 move there. And I mean, it's craziness. And so what can you do to take advantage of that? And what you see is coming. So look, Tesla was down almost a little over 4.5% today. On Friday, let me show you what I did. On Friday, I bought for just about $900. I bought 2 of the 1520 calls. And so I'm going to let these go tomorrow. But even down $75 or 4.5%, this trade is still, because of all the implied juice, all the implied volatility, this trade is still profitable, right? And just to prove a ridiculous point, on Monday, I bought the 2650, 2700 call debit spread for 14 cents. Okay. That's still a profitable trade because of, I'll show you the calls and puts here. And I bought another one today for 22 cents. And that one is in the red by what, $5. The implied volatility is what drives the train here. So do you want to be the person, and it doesn't matter if it's Tesla or it could be a high price stock, would you deem a high price stock, or a low price stock? When you buy calls and puts right before earnings, you're paying exorbitant premium. Okay. I mean, the out of the money, what do they end up selling? I got to go look here. Control Z. Let's see here. This is why people lose so badly on options. The 2650, 2700, I bought that, and we're going to track this together. Does this go up in price? I bought it for 14 cents and 20 cents respectively, or 22 cents respectively. We'll see if I can sell it for more than what I bought it for, just to prove that there's so much. I mean, the expected move, you're at 1568. This is beyond the expected move, 2700. The 3300s are trading for 79 cents by 84 cents. The market makers know when there's hype, they know how to price options, and if you're a seller, and I know I bought these, but I will be selling these. If you look at the, well, I guess I'm a seller in some respect here because I've sold the 1520 calls, which really kept my gains here. And then I sold 2700 call, and I sold the 2700 call here. So we'll see what happens. But the implied volatility is the juice in all of this, and understanding that around earnings. I know there's a bunch of people in the audience that like options, that trade options, but have never been explained what I just explained with implied volatility, and why you don't want to be buying at the money calls or at the money puts right before an event is about to occur. It's so much, you're paying. It's like the person who needs a car and pays $50,000 for a Ford Fiesta. Do they even make that anymore? How about a Ford Focus? They still make a Focus? Who pays $50,000 for a Ford Focus? Nobody, right? It's a $15,000 car. So don't be that person, and understanding this and just because the number is less over here, don't go out in time. Let the event happen. You can make more money after the event is known. It's a binary event, earnings. You can make so much more money after the event is known. So hopefully that all makes sense. If it doesn't make sense, just email me, tim@revereasset.com. Hit me up on Twitter, and we'll figure it out together. And we're gonna start doing just private meetings for our clients, and we're going to get into more of these topics, and more to come on that a little bit later about these client meetings that are going to happen once a month. So if you're a client of Revere, we'll be getting more and more into these types of topics, as well as state of the market, and where we think just a little bit more in depth economically where we think things are going. So now here we go. 3 days left in what Chipotle, but what Chipotle does is reports tomorrow. Expected move is about $78. So it reports tomorrow after the close, most likely holding my Chipotle position unless something drastically changes, but I'll update that with you. And then before we get into gold and silver, so bought some, oh, how about let's do this, CDNS. I kept my CDNS, so I bought CDNS where? 629, we're 629 right here. So look, what is something that you notice about this period? And I want to illustrate how we buy stocks at Revere. We just don't buy willy-nilly. When you come into the Revere family, we strategically add positions. And so 629 was what? This is my setup, man. This is my groove. Support off the 21, forming a little bit of a flat base, especially on a 195-minute chart, or 78-minute chart. And then now you're moving nicely. Come back, check the mean again from a higher level, and then before you know it, Bob's your uncle, and you've got higher prices. So I kept my CDNS through earnings, but here's the conundrum that I have. It's at the third ATR, and what do you know about the third ATR probabilistically? Yeah, there's a really good chance, even in the zone of the third ATR, that you're going to pull back. And so what I'd really like to see CDNS do here is just kind of flag out, consolidate for a couple of days, let those gains, don't start closing below this low, but just kind of get yourself, keep the trend in check, just trade a little bit, and then after some time has elapsed, independent of my daily chart, it could be a week or two, keep that momentum going forward, but it needs to catch its breath here. And I wouldn't expect it to just keep going up. What I'd want to see is it to hold 100. You're trading 103. So that is CDNS. We kept that. Now, what did I buy today? I bought some Roku. So Roku has earnings coming up when? In August. And so, yep, August 5th, after the market. So these tails are a little problematic here. We got one of those tails again today, but I really like this pattern. Now it's not off the 21. What you're getting is this big power day here, and now you're getting a consolidation. And I like that consolidation. I like that it's holding the 5 and the 8. I don't know. Maybe you check back to the 21. I'm not 100% sure you're going to get there, but I love the 195-minute chart. And so you can see how it's moving up here. So consolidation, power through. Now you've got another one of those kind of consolidations. And my thought is if it takes this level out here, do you get 170, 180, maybe even 190 from that level? I don't know. Earnings, coming up are going to dictate a lot of what's happening for the future in terms of the indices. 70% of all stocks follow the general indices. So you just want to take it a day at a time. But I like the setup in Roku, and I really like our entry in what we did today. Things that I don't own, I like Apple here. I'll tell you, I like Apple a lot here. Comes down to the 5 and the 8, and it holds. This is a beautiful pattern developing in Apple. If you look at a 195-minute chart, look at that. That's really super nice. You can take this to an hourly, and then maybe something like go 2 hour. Yep, you can see the consolidation just a little bit more cleanly there. I like that. Let's see if 400 acts as a magnet. And look, you got Microsoft tomorrow. That's gonna weigh on the Nasdaq and the indices. Tesla, maybe, I don't know. So Tesla and Microsoft are the two biggies that are gonna weigh on the markets. And then let's do this. Let's do some gold and silver, folks. So GC is the gold futures. That's a really good looking 2 hour chart, but let's get it to a daily chart. So there is a breakout, right? 1844. That's just a really nice power move. And you're not even at the third ATR. That's interesting to me. You can see over here, like back in February, even though you hit the third ATR, what do you pull back? You get close to 30 ATR, you pull back. We're not at the third ATR, but the problem, my friends, high quality problem, GDX is at the third ATR. Now, let me show you how strong the miners have been. We've got a nice 5% position in the miners. GDX hits that third ATR, pulls back, doesn't even get to the mean, and now it's reasserted itself. So I'd love to see something like that, a little shallow pullback, shake out the weakest of the shareholders, and away you go. GLDM, I've owned this position for clients and added to it when opportunity presents itself since last September, third ATR. And it's the same story here. Pulls back shallow, there's the mean, and now you hit that 1272 extension. Moves tend to terminate at extensions. Let's see. We'll have to figure out what gold's going to do here. But I like having those positions. They continue to work, and bonds continue to work here. And so we spent a lot of time on bonds, and it's just a really nice consolidative chart. It's a moving average stack. It's not a bad looking chart at TLT. And we spent time talking about the housing trade, the restoration hardware, NTH, the Meritage home trade continues, and that's going to report. Let's take a look at that date here. 7 earnings after, that's tomorrow. Tomorrow, Meritage reports. That is a hold for me right now, unless something changes. And then DHI, DR Horton, and that reports later. Another reports after Meritage, 727. That continues to work too, and that's a really pretty chart. So we'll see what happens here market-wise. But look, let's do SPY, see where the SPYs are trading after hours. So you went out at 325, trading 324.87. We'll see how it turns up tomorrow. Don Vandervoort has a video with you tomorrow night. I'm back Thursday. Friday, we've got the normal stock market video. And then for those in the know, I'll show you one last thing here. For those in the know. When you go to revereasset.com, we tape the video podcast Friday afternoons, and I place it right in here for you Friday afternoon, as soon as we get done doing it, so you have it to watch before it goes out Saturday mornings in our normal email. So if you want it early, check in here Friday afternoons. With that, I will see you at the next update.